Well, I mean, I think the Chinese government has taken their foot off the brakes in terms of sort of regulation, which was very, very abrupt on industries such as after school education and stuff like this. It's a mixed bag. The thing to be careful, and actually, Elson, you touched on this about not correlating economic growth with investment returns. If you look at China, it's been the fastest growing economy in the world over the last 20 years or 30 years, and it's been one of the worst performing equity markets. And the reason is growth does not correlate with return on capital employed. And that's very crucial. The government's hand is on just about everything in China. Now, that said, there are some businesses, for example, when I mentioned that they look quite cheap, some of the consumer companies, we own China Mengniu Media Group, which is a white goods manufacturer. They look really quite cheap, and they're typically, air conditioning units in China are still underpenetrated, so you can see some growth. But it's so interesting because we always get questions on China. We never get questions on India. And we think the investment outlook over the long term is far greater with India because you have a much richer capitalist history than you do in China. It's only China, it's what, 30 years maybe? In China, we're investing in companies that are multi-generational. We own a company called Godrej Consumer. Nisa is the chairwoman, she's the 5th generation. And therefore, how these businesses behave in really bad times. And gosh, India has had a lot of bad times. So it's very stock specific in China. And one needs to be very careful about the regulatory environment as we've, as we've seen.